All right, excellent. T. You recording? We're good to go. So, family, just bear with us. We're gonna give a couple minutes for people to join before we get started. I'm excited about this one. Got a new format going for the green team. Vanessa gonna go over in a second once we get started. Mark gave y'all a sneak peek on Clubhouse.
I know, right? You saw that?
Mm-hmm. He gave a sneak peek, sis. But this is good because he also dropped the gem that, in order to be a great investor, you need to understand the macroeconomics. So
Facts.
this will be good. This will be good. All right, say we give another minute or two and we can go ahead and get started.
Okay.
Vanessa, like, she out of this world.
What is that? Because we're talking about the world.
Yeah, right. The macroeconomics globally.
Got that SpaceX feel. I like it though.
Ooh, Starlink.
Yes, Starlink.
Semi-matrix or something.
So, Mars.
Uh-oh, cuz I'll go on mute for us.
I figure if Renz could be floating in the matrix, I could be in
Yeah,
outer
right,
space.
right. Yeah, that's my mind. I'm always floating. I'm always thinking about something.
Do we still have people? Oh yeah, we still got people coming in. Okay.
Yeah, we still got a few.
Mm-hmm.
This is a prime example team of a pivot. We had to pivot. We had to pivot the green team due to innovation. We had to pivot the green team due to innovation.
That's a good point, though, because you never know what kind of jobs can be created out of innovation.
Yeah, we had to pivot. All right, sis. I think we're good. We can go ahead and get started. We're recording as well, so.
Cool. All right, Renz, whenever you are ready to start the presentation. All right, thank you. So I just want to welcome all of our cousins to Market Sentiment Saturdays. This is going to be the new focus for the green team. If you guys all remember, the green team was focused on the strike price formulas, but as AJ so eloquently put it, technology put us out of business, innovation put us out of business. So we are repurposing the green team to now focus on market sentiment. And market sentiment is basically how the world feels about what's going on in the world and how that plays out in the markets. So it's when events happen and things take place, how does that impact how you feel about the stock market and how the world feels about the stock market and how that plays out in your portfolio? Can everybody?
Yeah, hey, can everybody go if you're not talking, please?
All right, so with that, we're gonna go ahead and get the presentation kicked off. And Tayo is going to talk to you guys about some of the things that went on in the market today. Briefly, what we're going to do with this is we're going to give you a comparison of the indices for the week, talk about various economic indicators, and then we're going to go over some earning report highlights, who hit and who missed, and then also some happenings that happened in the world, some current event type situations. So This is the first one, obviously. So we're gonna give you guys an idea of what the flow of the presentation and the content will look like. And then moving forward, we'll have the cousins on the green team to actually. So we will be taking volunteers to go in the upcoming weeks. You can go ahead and move forward to the next one.
So in this case, okay, just making sure. So in this case, as Vanessa says, you want to go with the market indices. So as we look here for the Dow Jones, you see an increase by 3.89%. Same thing for the S&P 500, you see an increase of 4.65%. Going on to the NASDAQ and the rest of 2000s. So in this case, what you want to keep in mind though is the changes, because of course, how do the underlying stocks react in the market. So as we see, we sort of started out during the week kind of like on a downtrend, but we had the uptrend at the end of during the end of the week, and we kind of had a rally towards the end of the week. These are the type of things you want to just keep aware of when you look at the indices in the morning or the night of. We kind of use these as kind of like the futures, kind of use them to kind of give you a certain indicator in the sense of how that day might be for the rest of the day. So that's something you want to just keep in mind of when you're looking at the market. So you should always have this on your watch list. All right, so as we come to the economic indicators, so the first week you always have like the non-farm payroll. You also have other, sometimes monthly as well, like the unemployment rate. You get like consumers trading goods and services. So these things matters, right? The reason why this matters is because if you take and you look at like non-farm payroll and you look at the type of jobs that are like increasing as well, then it kind of gives you an indicator of like what sectors are doing well, what industry is doing well. Because if they're hired in that sector, that means they're obviously doing well. They're invested into their business. So these are the type of things you want to keep in mind of. And it's also important as the unemployment rate is going down, in investors' minds or in just the economic grand scheme of things, you're thinking about that if there's more money for people, if the unemployment rate is down and more money is being generated for these workers, then we're thinking about them spending that money into the market. So you're thinking about what retail spaces will benefit from the unemployment rate going down and more people making money. So same thing when you look at goods and services, it's very important to keep in mind. So just like a quick fact, like last year, 2020 was like the first time we had more goods than services. We're more a service-based country, right? So if you look at the economic data from like over year, we're typically like more 2/3 of our GDP is more services and 1/3 is like goods. But in this case, it flipped for last year. We had actually way more goods to the point it was almost like 60% goods, 40% services. So that's not the normal. But this also keeps in mind that so then we're exporting more goods, but we also import more goods. So just keeping in mind that this is very beneficial, because then you also still keeping that in mind of what sectors is benefiting from this. You know, think about it from that mindset, like what manufacturers, when they're making more goods, who is exporting the goods, who's the benefactor from that. You can move on to the next one. So here's an interest rate. So as we've always heard when discussing inflation, the reason why this is important, that when we think about the interest rates being down, then we're thinking about companies have more money. They're not taxed as high. They're able to invest more. And that's how the type of the thinking. So it's able for us to also put our money into the stocks, into securities, because we're also not getting a good return, right? So this is something to always keep in mind of in your, as far as like what's going on in the world, because when bonds go up though, then we're thinking about inflation, and inflation happens, then we're thinking about more interest rates on businesses, which means they might spend less. So that's try to get the brand picture, the macroeconomic idea of it. That way, you know, moving forward, that when you hear some things in the news or CNBC talking about the interest rates been going up and we're worried about inflation, you know exactly what they're talking about. And then so when you see something happen in the market, you'd be like, oh, okay, I kind of saw that happen because inflation rates was rising. For the Fear and Greed Index, I know we started out pretty fearful in the beginning of the week, and we ended kind of like, I know we got kind of neutral, but like now we're kind of good because we had that rally at towards the end of yesterday. So again, this is another indice you want to have, another market another thing you want to have on your market watch list to be aware of, because fear and greed is a determining factor. When you see those big down days, it's a lot of fear because a lot of people are selling. When there's a lot of greed in the market, and you see a lot of buying, you see the market rally, you see it start the stock, you start feeling better about your stock, and nobody doesn't feel like AMD is not doing what it's supposed to be doing. So this is the type of things you want to be aware of. So the VIX index pretty much correlated similar to like the fear index as well. Typically it's the inverse of the S&P, but there's been some really interesting things they said over the last year. But usually VIX goes when you see the VIX increase, you see the S&P, you see a lot of that's when you start seeing like that kind of like that correction starting to happen. So always keep in mind the VIX. The VIX should definitely be like number one on your watch list. So you see we went down 2870 over the past few days, but you see how high we started. We started like 32 and then opening on February 2nd. And then next we're gonna move it on to the weekly earnings recap. So we had some really heavy hitters present some dope stuff. So
Mike, are you still on?
he said he can't unmute.
Hold on a second. It looked like the whole thing is okay. Let's see.
All right, there we go.
I was like, oh, we lost Mike.
That was good. I'm all right. Renz can present for me. But yeah,
Sure.
the scoreboard. This is where we know what companies make the grade. It's always good to see the stock prices go up and down, but it's all about the report card. We got to know who's doing a job, who's being a good steward of our money. If we're investing in a company, we want to make sure that they making our ends work. Google beat. They did an amazing job. Even though they benefited a lot from the stay at home during the pandemic, their revenue went up 23% year over year, with their ad revenue up 21.8%. And that was mainly driven through searching and also YouTube. With more people home, they're doing a lot of YouTubing and they're doing a lot of Googling. But what's notable for Google in their earnings is that they really highlighted how their cloud platform is doing a lot for them, and they're doing a lot to compete with AWS and also with Microsoft Azure. Amazon beat in a big way. Not only did they beat, but they broke the symbolic 100 billion mark the first time, by coming in with 125.56 billion, which is amazing. It's huge. In a quarter, that's crazy. With that, they also came with some news, which I'll touch on in a little bit. Qualcomm missed. Their adjusted earnings beat expectations, but their sales were slightly under what Wall Street expected. This is big because, as you can see, that red arrow down, their stocks took a huge dip. They took almost a 10% dip after that miss. With everybody having a shortness in chips and everything, it still didn't get digested well by the market. So we got to see how Qualcomm's going to do to recover from that. Exxon Oil is having a hard time. Last week it was Chevron who had their earnings and they missed. But not only did they missed huge in revenue. And this time Exxon did the same thing. They missed in earnings per share. I mean, it's almost dismal. Their earnings per share is at a cent and at 3 cents, and they couldn't hit it. And their revenue, they missed it off as well. Now, BP is another oil company that missed. Again, oil is having a huge problem, which we'll cover that in a little bit as well. but let's see how, coming up, they'll bounce back from that. Next slide. Now going back to Amazon. Yes, they blew out earnings, but that wasn't the big news. The big news was that uh, Bezos is stepping down. Now, a lot of people looked at this as, it's a big deal. The CEO, uh, the guy who pretty much built it from an idea to the beast that it is now of a company, stepping down. But what I do want to highlight is the person who's taking his place is not somebody new. Uh, Andy Jassy, he came up with Bezos and he helped develop the AWS side of Amazon. As most of you know, AWS does a big part of Amazon's, revenue. They do a large part of their work, and not only that, they help host tons of other people. Um, so Jassy is very well versed. He's very good at what he does on the AWS side. And even though Bezos is stepping down, he's not leaving. He's taking the chair position. Um, and so it's not like he's leaving. He's just basically stepping back a bit. Bezos announced his decision to step down in the earnings release, and in a memo to his employees, he noted that he will focus on new products and early initiatives. So he's still there. He's just not dealing with the day to day, but more so he's dealing with the next big ideas and anything else that's going to help drive Amazon into the future. In his new role, including the day to day, it would include the Day One Fund, Bezos Earth Fund, the Washington Post, and what I believe is going to be his driving force is his private space company, Blue Origin. So those are good things to be looking for in the future from Bezos and from Amazon to see how they're going to, position themselves. We already know that he has beef with Elon, so let's see which one of them, will get to Mars first.
All right, guys. So oil companies misses on quarterly revenues. All right. So now this is the segment that we call Word on the Street, which is basically us breaking down some important news that we found out in the market that we kind of need to keep in our back pocket and not only learn from, but also maybe pay attention to some things in the weeks ahead and the weeks to come. So if you can go ahead and click, Renz. So basically now we're going to talk about global investments in oil and its effects. So currently global investment in oil, as many know, has hit its lowest point in more than 10 years. Many investors, as we know, when they invest into oil companies, has been predominantly around oil companies giving good dividends. However, as a result of COVID, a lot of oil companies started to cease their dividend payouts in order to conserve cash on hand, essentially. And as many people know also, a lot of oil companies just spend willy-nilly, so to speak, and don't really budget that well in terms of the cash that they have on hand. That also reflects in a lot of the lack of innovation amongst these companies. So as we see, a lot of investment in oil is now leaving. But what many people don't understand is that when you stop investing in oil, the price of oil can potentially surge in the upcoming decades. And as we all know, when oil prices increase, that also is a correlation to inflation. So that's something that we need to be careful about and monitor in the forthcoming. So we know that, like Mike said, with earnings Q4, because of COVID, oil companies were down, but it's something that we need to pay attention to, and we will talk about in terms of where they are moving towards the future. Fortunately, that could be a huge economic headwind with oil prices going up because not that many people are investing in them. And especially with the world recovering from COVID. So that's definitely something that we need to all be paying attention to. Fortunately, we are starting to see a slow recovery. OPEC has stated, and for many who don't know OPEC is just an organization of petroleum exporting countries, I believe. And basically they have come out and stated that they will keep pushing to quickly clear the surplus that has been left behind by the pandemic. And major producers such as Saudi Arabia have cut production in January, all right, which has led the US to be able to have a steady increase in demand and basically essentially try to start recovering as we see. Last week, we saw crude go up $50 to $60 a barrel, which is like up roughly 50% in the past 3 months. And that's like a 10% gain since the beginning of January, right? And we kind of see that as Saudi Arabia's cut production has opened up opportunities for us to grow. And on Friday, I think they actually reported their highest level in a year with a 1% increase. So that's definitely something to pay attention to, because we do not want a rise in inflation. The future of oil, though, many oil companies are hoping that the rollout of COVID-19 vaccines will mean a return to a more normal life for businesses and consumers, which would in turn boost the demand for oil and natural gas. Not as much pressure as of yet, though, by the U.S. to have clean energy like they do in Europe. So many investors, especially like what they deem as like the new millennial investors that are entering the market, as most know, we love the whole climate change movement, or the ESG, the environmental, social, and governance movement, so to speak. But the issue with that is the fact that those alternatives take a while to adapt to, and we're not there yet. And we still have a need and support for a need to support the oil companies in the meantime until we get to that point. I definitely expect some mergers and acquisitions to come. So that's definitely something for us to all pay attention to. And I know I haven't had quite a chance to look deep into the whole conversation about oil companies buying up EV charging stations for tax credit dollars, but I have heard that put out there also as something that we should also monitor in the up and coming weeks in terms of oil and the natural gas industry. So that is the word on the street for the oil.
Oh, sorry, I was on mute. So word on the street about the short squeeze. So I know a lot of people are probably not familiar, so I'm trying to go over it in a second. So basically what happens when you are doing a sale, short sale, think of it as like you buy an iPhone, right? You get your boy's iPhone or something, and you sell it for like $1,000, and you expect it to go down to maybe, or maybe you think you get on the streets for like $600. So you get the new iPhone for $600, and then you collect the difference, and then you give back your iPhone to your boy. So in a sense, what you're doing is when people are short selling, like they basically are being given shares as collateral to basically, because they predict price to go down, and they can buy it back for a cheaper price and then collect that difference. As a result of that, they're basically charged a certain fee for basically being borrowed those shares. What happens though when price goes up? Think about it. They already paid collateral, so they now have to buy more shares to accommodate when the price starts going up. When that happens, they might have to like keep buying more shares or close their position. What happens in options though, more like known as a gamma squeeze, what happens when you buy a contract, remember there are shares attached to those contracts. So if you was to buy a whole bunch of contracts, somebody has to buy shares to cover that. So when people are short selling on the option side, they also have the same situation going as well. They have to like exit out their position, or they have to just buy more shares as collateral to cover up their short sale on the put side. So just keep that in mind. And what happens is that they are trying to basically predict price to go down, but think about it, when price goes up, they're in drawdown. So that means they're negative, and as it keeps going up, that margin fees, the cost, everything keeps going up. So they have to get out those positions or close. So then when people see buying the price, and when that happens, it starts valuing, because they get out the position, they buy more shares, and the price just keeps going up. It turns into this big cycle until, as long as you saw what happened when they shut down and people couldn't buy no more. So then it dropped because you only had sellers. So just keep in mind. And they also like, and the funny thing is that they were short selling like 120%, which is like, how is that possible when you can only sell 100% of shares? So that's the reason why some people feel the way they feel about it, because they just like, that shouldn't even be possible. And what happened as a result of that, because so many companies were getting squeezed out their positions, they had to like collect their positions, the money out of other positions to cover up their position in GameStop. So when we saw that, we start seeing those dips, that's them taking that money to rotate to cover the losses here.
Mike,
Can you still not unmute?
Oh, there you go, mute.
He's like the kid with like the safety lock.
Yeah, keep locking me in, man. That's good. It's all right. Yeah, so next week, the next presenters, they'll be covering earnings as well, and some notable earnings that'll be coming up is S&P Global, Chegg, Roku, Datadog, Proto Labs, Toyota, Uber, Disney, and GM, along with a couple others. These are just some notables that we see, some that are in the SIPs, and also a couple others that just because of the news that they're putting out, we were kind of interested to see what they talking about. You know, it's always good to know what the competition's report card is looking like. So if anybody's interested, you can go into the red team chat. The green team chat, and say that you're interested, and we'll put you on for the following weeks.
Cool. So just to give you guys a brief synopsis of the market as it stands right now, you saw the numbers, you saw that all of the indices are essentially up for the week, and they're also up year to date. And even though the unemployment numbers are still high, they're going down continuously. I think we just had the third consecutive week of lower numbers. And so essentially that coupled with the talk of the fiscal stimulus is giving everybody positive thoughts about an economic recovery. And so how that plays out in the market is, if we feel good about the way the economy is going, we feel good about the money that's coming into the economy, we feel good about companies, we feel good about investing, that all plays into what we see now playing out as a bull market. So looks like we're going to continue to have this bull market, especially if these stimulus checks do get approved and sent out, which I know everybody is looking forward to. So the stimulus checks being released, as well as the vaccine. So more of the vaccines are being distributed. And so the numbers of COVID are going to continue to go down. And so all of that, again, is just going to continue to lead into consumer confidence and lead into people feeling better about just the economic state. Next week, we do have some more economic numbers coming out. We're going to have the optimism report that'll be released on Tuesday, inflation numbers on Wednesday, and then consumer confidence on Friday. So hopefully those will be positive numbers, and we can continue to have good performance in the market. So right now we are going to open it up for Q&A and just discussion amongst the cousins. AJ, are you going to unmute people, or are you going to let them unmute themselves? Okay.
Yeah, I can. Because I have no idea what's going on. I think it's like I have to unmute you or something. So if you just raise your hand or put it in the chat and let me know that you have a comment or want to bring something to the table, or a piece of news or anything that you might want to share. Guys, this is just your opportunity, like Vanessa said, to kind of discuss or ask any questions on what to look forward to and expect out of the market next week. So just raise your hand or let us know in the chat if y'all have any questions.
I did see a question a little bit earlier, and
okay,
let me see. I'm going to see if I can find it. Okay, so it says, so missing on revenue but beating EPS means you kept your costs down and found a way to get the profit you promised in terms of earnings.
Okay, yeah, I think Tayo gave a good answer. T, do you want to break down revenue and earnings per share for everyone and kind of answer the question for everybody?
Yeah, I can do that. So basically, when you have the revenue, it basically, if you're missing out revenue to investors, that means your sales are not meeting expectations. But meeting earnings per share, it means that you made a certain profit. So if you don't meet those profit, then or if you meant profit but you didn't meet revenue, that's kind of what it implies. That it could be for a number of different reasons. You could have kept costs down, but it could have been like maybe some one-time payments came through, or You could have had like some investments come through from some of the places. There's a lot of different reasons. So both factors matter in this sense. In general, me personally, I always like to still go a little bit more in depth and look at what's the operating income. I think I personally like to look at operating income a little bit more than just the net income of the company in general, because there are always some one time. It could be like some one time one offs, but in general, like that's typically what it means when you see that earnings per share. This means that they made profit, but they could have just missed on sales expectations.
Exactly. And we have a question from Cuzzo Faye. Hopefully that answers your question, Cuzzo Curtis, by the way. Feel free to raise your hand if you also want to comment too. Cuzzo Faye? I think I unmuted Cuzzo Faye.
Yeah, this would be every week where we want volunteers, people who want to do this.
Okay, great. There you go.
There we go. Sorry,
Sorry.
T. Hi, Cuzzo
Sorry.
Faye.
Hey, hello everybody. How everybody doing tonight?
Good, and yourself?
I'm doing. I'm doing. Today I had a rough day today, but I'm doing.
Oh no, Cuzzo, we gotta keep you in our prayers then. You know we family,
Yeah,
so.
just back-to-back funerals kind of get you down, but you know God is able. So,
Amen. Yeah.
sorry.
Our
I was.
condolences.
Thank you. I appreciate it. I was questioning something in reference to the overall. I think it was. I came on a little bit late. I'm sorry, but I believe it was. Taya was speaking about the economic indicators pertaining to unemployment. But I was curious if anyone had actually listened to the last update that Kathy Woods gave, where
Yeah.
she indicated the average work week had increased, and that was one of the huge indicators for her that she said that most economists doesn't look at, but she thought because of her background that was something that was that we should be looking at. I didn't understand, and I did do some research and went back and saw that the average work week prior to the new update with the 0.3 hours increase was December was 334.7, and then it looked like it had went down from the previous months, which was 34.8. But I was just curious to know if anyone could help me understand what does that mean as it relates to an indicator that we should be concerned with moving forward.
If I heard it entirely correctly, I think you're talking about average work week, like so how often are the workers working, right? That's what you were.
Yeah, she touched on. She touched on 2 points. She said most people basically look on the average hours earnings, which also went up. But she said something that most people don't look at, economists specifically doesn't look at too often, was the average work week increase, and it had an increase 0.3 hours. But she said it was a huge indicator, but she didn't go into any detail, and I was curious if anyone could help me understand. I tried to look it up, and I couldn't find the link.
Okay. So in that regards, I think what she's referring to, and this is how I would look at it, but I would you can always message me, I would like make sure to confirm that with you. From my perspective, just from just even the doing in general, it will tell me that there's more productivity. That's what I would be thinking from there, that because there's more workers, that means there's maybe more demand for certain products, services. That's how I would look at it. So to see it that way, I'm thinking off rip, like, okay, this means that there's more workers doing more stuff, or somebody's doing more, something more productive, which means that that's a good sign that there's a lot of healthy blood kind of being pumped into the workforce. And that's how I would.
Exactly. Like for instance, like within my company, Cuzzo, right? I have been working an increase in my hourly, but my whole team has, and that's because I work for an airline and we're currently on a project with working on healthcare passports, right? But like people are saying, oh yeah, even Cousin Prentice said in the chat, with that productivity is going to come that increase in earnings for the airline industry to be able to get back up there and start generating revenue now, if that makes sense.
Well, I think I was looking from a point of influence. I'm sorry. Go ahead, Vanessa.
Oh, I'm sorry. I was going to say, wouldn't that also lead to fewer jobs though? Fewer new jobs? Because if you're taking the people that you already have and giving them more hours. So you have more work, but you're just spreading it out amongst the people you already have.
Mhm.
That's fewer people that are being hired to do that work.
Agreed.
Well, I think I was looking from the standpoint, I think that and you touched on AJ in your presentation, and you guys did a phenomenal job, first of all. So everybody, hands down, as always, excellent. You touched on AJ about the inflation. And one of the things that she was indicating constantly, I listened to this one, I listened to the last one right before this one as well. And she keeps talking about the potential for inflation, but we shouldn't be concerned because of our supply shortage issue. So when she made that statement, I was thinking, well, maybe she was concerned about the productivity is the indication, since we have a supply short. Like we talk about it in the tech world, we're talking about, obviously the shortage of the chips, right? But I'm thinking we may have, if you think about the entire economy, if you're in the manufacturing side, there could be a shortage in other areas like housing and so forth. So she was saying the productivity, which she didn't say where the productivity had increased at. She didn't go that much in detail, but I was thinking maybe she was saying the productivity in the market indicated that surplus may be coming. And she was concerned if one of the things she had linked in this last one is very clearly is if we as consumers start freaking out, like panicking through fear, and think that if the price of our goods and services, but basically the goods, is going to increase, that we need like a housing. She referenced housing. We need to quickly jump into the housing before like interest rates go up or the surplus, is below what we can the threshold. So we would get in at the height, which would throw the prices of things higher that could cause a problem. So I guess that's where I was thinking. I don't know if that makes sense. I'm explaining it properly, but I was thinking more of that was her concern with inflation. She kept commenting on the surplus and demand. She was saying right now we're okay because there is a, there's a demand in the market, but that they're having a shortage issue to feel it, and that's what's causing the prices to go up. But if the surplus would happen, we would actually have inflation, and it would be higher than the Fed's, which would be the 2%.
Yeah, I gotta go back and listen to that video because it's
Okay,
on
it's
the
like-
list of a
it's like
million other things to
15
go back and watch.
I know if anybody can help me out. I'm trying to grab everything.
trying
I
to
can.
What I would
It's
say-
around 12:35. It's around the 12:35 mark on the new one.
What I would say is that indicator of productivity going up, and also that's showing that we're starting to ramp back up. During the pandemic, during the shutdown, everything kind of slowed down, pulled back a little bit. People readjusted, pivot how they do business. But as you see, people are starting, increase productivity, do a little bit more work. You're starting to see a little bit more flow in the economy. So she sees that. I'm assuming that she's seeing this as indicating that the economy is starting to, creep back into a normal rhythm of things. Kind of like cousin Prentice said inside. You need inflation. You need the movement. You need the transfer of goods to show that the economy is good and well and living. So her major concern was that the fact that the economy would bust, depending on how policymakers would react and how they would handle things. But in this situation, she sees it as a indicator of a positive direction.
What I'm assuming then you listened to the clip, correct?
3 times because I didn't hear it the first time, and the second time it didn't make sense.
Okay. The other part I had on that, it goes with the overall economic condition, is when she had referenced actually, Vanessa, you indicated it too, the displacement of jobs, but she said that this displacement with the next 5 years could create new jobs. So the animation that's coming would actually increase the jobs, and we would actually have a better skill force, if you will, but it would increase the jobs. So, and my son just came out of the room, so I can't.
Which makes
I was
sense.
on something, but I forgot. I'm sorry.
Which makes a lot of sense because, like I said, I can go right back to my example. I mean, like I said, yes, we are working overtime and we are overloaded, which is a meeting we just had this past week, a indicator that we need to do higher.
Okay,
So,
I got my thoughts. It's the economy. That's my second part. And I'm a
Go
get
ahead.
off
Cousin.
here so somebody else can jump on. But the second point that she talked about was the concern of the or actually in this case, the third stimulus check, and question the need of it, because there, like you had indicated before, there's already showing signs in the current economy that what has already occurred with the first and second stimulus packet is making its way through the economy. And she was concerned with what this third one could possibly do, and she wasn't in agreement. And I was just wondering, from our standpoint, how can we prepare for looking in the future if things should turn different? I guess with a surplus of people having extra money to go into, I'm assuming, services.
I don't know about you, but for me, having a lot of money is not a bad problem. That's a good problem. It's a welcome problem.
It's
And
a good
I think
problem to have.
her fear is that money has to be paid for some way, somehow, eventually. And as an economist, I believe she's forward thinking, reaching into the future to see who is eventually going to pick up that dime. But we all know it's going to be us. It's going to be the taxpayers who's going to have to pick up that bill once it comes due to be paid. But for right now, if you also recall in the video, she said that, with the economy moving positively at the moment, the extra influx of capital would do nothing but good to, put it into high gear to where, you will really see a move in goods and services, and you'll see, a gain in consumer confidence.
All right. Thank you all. I greatly appreciate it. Have a good night.
You too, Cuzzo. Thank you.
Good question. Appreciate it.
Bye.
And everybody not following Kathy Woods, I definitely recommend y'all signing up on ARK Invest, and not only following them on social media, but getting their news and emails sent, because they do send out some good content. So
Yep.
All right, whoever's next got to come up with a fire question like that.
we got Curtis, Cuzzo Curtis. Give him a sec. I think it takes a minute to unmute. There we go.
Hey, what's going on? So this I was digging into. I just put the link in the chat. Trying to look at this a different way, like digging the data. They have been, every single time an officer gets shares, they like automatically sell and exercise those shares the same day. I'm talking from this down to every director. I would usually see that as a negative thing, but the history on this is going back, I'm talking years. So I just see it as they've been doing the exact same thing that they've been doing for forever. It'd be different if all of a sudden they started selling, but every time they get options, I'm sorry, they're afforded options to go ahead and they sell.
Sorry, man, you're breaking up.
Is it me or is he breaking up?
Cousin Curtis,
I don't think they're doing anything weird.
your Wi-Fi is not being letting you be great. Cousin Curtis, your Wi-Fi.
Oh, yeah, it's a lag too.
Can you hear me?
I'm gonna stop sharing.
Let's see. Hold on. Okay. He should be able to unmute himself, I think.
Yeah.
Cuzzo, Curtis?
Oh, y'all there? Can you hear me?
Yes, we can
Yeah,
hear
we
you
got
now.
Yeah, we can hear you now.
My fault. So yeah, I was just putting that link in there. And it seems like they always exercise their options. So I just wanted to see how you guys looked at that, and if I was looking at it wrong, as a good thing or a bad thing. Every time they get their options to exercise, usually I'd see that as a negative thing, but to me, they've been doing it this way for years.
Yeah, if it's kind of, if you look at the SEC reports, like, so if you was to find the form, I think it's like form 413. If you look at the form of when they like exercise their options, there's like usually a reason, and that reason will tell you that if that's like an automatic decision that they have to abide by, like a certain executive action that they have to do. If it's one of those reasons, I typically don't mind then, because that's just how the company practices are.
Yeah, and I would also still continue. I would look at how many shares they're still holding, because I'm looking on the site for the link that you sent, and I do see that they are selling, but they look like automatic sales. And then also a lot of them are still holding quite a few shares, like in the hundreds of thousands. So I mean, it could be that part of their compensation is tied to those options, and that could be how they actually get a portion of their income. So I wouldn't necessarily look at it as a negative thing.
Excellent question, Kaza.
Yeah, in addition to that, I would add that, it's also a way they work around taxes, because income versus the gains that you get based on exercising your shares is taxed differently.
Sure.
So you got to remember, we're looking at things the way we were taught to look at things. You got to look at the way the top down looks at things. This is a way to skate the man and, leave us holding the bill.
Oh yeah, that is a good video. How the economic machine works by Ray Dalio. He talks about credit and inflation. Yeah, that's a good synopsis. I think I learned about it in my economics class.
In 30 minutes.
It is an excellent video. I was about to say, and it's pretty quick too. Any other questions? I do see some in the chat. I know Lori was having, and Prentice were having some good conversations with people.
Oh yeah, I just thought they were just dropping gems back and forth.
They just having side chats that they don't want to share with the family. I mean, what's up with that?
Lawrence, we are talking about Kaza Iman dropped the gem on How the Economic Machine Works by Ray Dalio. You can find it on YouTube.
I'll drop the link on there.
Kaza reigns with the gem for you. We're gonna drop the link for you. But yes, guys, we recommend everybody go and watch that video though. Any other questions? Any other things people might just want to discuss going into next week? I definitely want everybody to keep an eye on that VIX. All right, Kaza runs with the chat. All right, doesn't look like we have any more questions. Oh, we got one hand. Kaza Iman, thank you.
There you go.
Go ahead and let her unmute.
Oh, not a question. Maybe just a suggestion to add for next week. Instead of doing just like domestic macroeconomics, can we also like incorporate international macroeconomics as well, just to get like a global standpoint as well? But I think that would be important to know what's going on outside of the country, just to add if we're going to do like macroeconomics. I think it'll be important.
Yeah, I agree.
I agree.
Yeah,
Definitely, yeah.
That actually gets me to the point where I'm thinking about like why I'm so bullish on China. If you like look at visual capital and the data, they're expected to have the biggest growth. They also had exported like what I think like for us to just America, they exported like over $200 billion worth of goods.
Yeah.
When you look at those factors too, and it just made I couldn't deny that I just on China. Like all that macro, and that's the type of things that you should be able to like be able to foresee. All that data. Once you start seeing that data about China, you're just like, oh man, I gotta get exposed a little bit, just a little bit. I'm not gonna, I can't see them billions of dollars and just ignore that. Like I had to say, the data is saying to get in China.
Mm-hmm.
Yeah. So like what I usually do is like, since the United States really low key is behind, like if I want to foresee what's going to happen with the future, especially with like technology and stuff, I usually look at China's economy because they are well versed and well advanced in certain areas. So I would like watch YouTube channel like videos on what's going on there, and that would help me foresee what the future of the United States can be. And also like other countries like Singapore, Malaysia, the eastern, like what is it called, the Southeast Pacific.
Yeah.
Mm-hmm.
Those countries are like well advanced in technology. So it's kind of like good to figure out what's going on there, because essentially that's also going that's also essentially going to happen in the United States eventually. So
Definitely agree with that point. It definitely will give you some insight into what's to come in terms of U.S. investments. I definitely agree with you there, sis. But I appreciate your feedback. We definitely will start incorporating international economic data so we get a more macro view. Thank you for that. Guys, and please, we just came up with the idea of pivoting this group, but like we said, we by no means, we're open to suggestions, ideas, opinions. So please share if y'all have any ideas on how we can make each one of these better in terms of us understanding the market as a whole moving forward. So.
Yeah.
Okay, I still see questions in the chat, I think.
Let's see. How do you guys feel about CIIC, the SPAC rumored to merge with Arrival?
Oh, I haven't done my own due diligence on that, so I
don't really
can't speak to
follow
that.
SPAC, so
Yeah.
I know.
I haven't done enough.
Aside from Mark saying that he likes Arrival and to look for it, no due diligence on it, so I can't add any value.
Yeah, I haven't.
Yeah,
I know a lot of. Go ahead, T.
No, I was gonna say no.
No, I was just gonna say I know a lot of people. I see somebody saying they're scared. I do see a lot of people scared to invest into those markets. But guys, a nice ETF would be good.
Mm-hmm.
I like EEM.
Yeah.
I like that too.
I like
I'm just gonna throw that out there. I like EEM, so do your own research. But definitely, guys, I'm the same way. Me and Chinese companies one-on-one, we don't get along, we don't tango. But I definitely would look into VWO was another one dropped. Definitely look into maybe investing in some of those ETFs, guys. There's definitely some good companies in those as well. And it's another way of kind of investing over there conservatively. So, all right, Lori dropped one, MSCI. Okay. So yeah, there's definitely different ETFs, guys, you can look into to get some of that growth that we, like T said, we're expecting to see. Any other questions or comments? We're not trying to hold y'all all night on a Saturday. We appreciate each and every one of y'all coming out, though.
Not seeing anything else in the chat. I mean, in the participants, I don't see any hands raised or anything.
Okay. Well, guys, like we said, this is the new thing. We're excited about it, especially in terms of, like Mark dropped the gem today, in terms of us becoming even better investors, understanding the economy as a whole will definitely help each and every one of us. So this is going to be great moving forward. We do ask each and every one of you guys to participate. No need to be nervous. We are all family, and we all just want each other to learn and grow from one another. I personally volunteered to do this because this is my weakness in terms of my investing. So this is something that I will be tuned into so that I can personally get better. But I encourage and challenge each of you to also hit up the Green Team chat and sign up and participate. So
yep. And we'll be dropping resources in the Green Team channel. We do have a layout for you guys, or a template for you guys to help you in creating your presentations. Again, we'll be dropping resources in there as well. So that way, if you're not very familiar with researching these items, you'll have tools that you need to do so. Like AJ said, this is something that we literally came up with last weekend. So it's still a work in progress. It's evolving, and we definitely welcome feedback and suggestions from all of you. This is a collaborative effort, and we hope that that you guys do volunteer to do this, because even if you're scared, I mean, that's how you get better, right? So the more we do these kinds of things, the more we read about this stuff, the more we understand it, the better we get with it, the better we become at investing. So that's my 2 cents for the evening.
I love it. Guys, y'all have anything?
Yeah, to add to that is just basically don't be afraid. If you feel uncomfortable, that means that that's where you need to be. I'll share. I got voluntold to do this, but it definitely helped me expand my mind, and I will be a part of more a part of the green team because I feel that as uncomfortable as I was researching and being able to speak to these points, it showed me I need to grow in this space.
Exactly. All right. Anything else before we wrap up tonight, family?
Yeah, I would just say definitely get involved if you just nervous about it. It really does. I was nervous actually doing this. I'm always nervous speaking. But I just challenge myself to just put myself out there and get better at it, every day. So I definitely think if you just want to become more involved and be able to just be able to speak about, because when you speak about it too, you also start realizing like you do know more than what you actually thought. And then if you didn't, then it just gives you now you just know you got to go do some more research and learn some more stuff, and being a learner, you earn more when you learn. So just definitely get involved with this. Isn't a tidbit like when Faye was actually, it just also reminded me just a thing. Kathy was talking about something really interesting about like robotics about in manufacturing and how we scaled up in like 15 years from like almost I believe it was like 20 robots to like 200 robots per 10,000 employees. We did that like in about 15 years, but the expectation is like we can see that being almost that happening in like a third of the time. So like by 2025, they expect it to be almost 200 robots per 10,000 employees. Also reminded me of something that I read in Morning Brew where they talked about a lot of robots exported for non-manufacturing for the first time was last year. So that's something to keep in mind. Just in those are type of data that helps you also develop your thesis about the entire market. Just FYI. But yeah,
Agreed. Agreed.
it's on
But
Amazon
we're excited.
for the chair.
Oh,
They want your chair. Tyler.
man, they want the chair, they want the views, they want everything, T. But like we said, guys, we appreciate each and every one of y'all coming out tonight and joining us. This is just the start. This is just the beginning. So any feedback, advice that you have, feel free to just let us know. And make sure you join us in the Green Team chat and let us know when you're ready to sign up for one. We'll be here on Saturday night. So just let us know. But until then, everybody have an excellent night and enjoy. Take care, guys.
Appreciate y'all.
All right, y'all.